Oh, we're live now. Well, good morning. I'm Mark Allen, business director with Gaper.io. And we have today, right now, Kedric Ban de Karr has joined us, and we have two others joining us. They're coming on as we speak. So why don't we start with you, Kedric, and just give a background of your journey in the fintech industry.
Thanks for the opportunity, Mark. Happy to be here. I wouldn't say I've got a journey in fintech. It's exclusively kind of crypto, but I have went to NYU, got a degree in finance from NYU. Went into a pretty entrepreneurial approach, started lots of different software businesses, and frankly didn't use my degree very much until really more recently. Kind of my journey with crypto has been. In 2013, I bought my first Bitcoin. I was almost certain that it was a scam, but I had some friends that were doing it, and they just said just buy a Bitcoin. Unfortunately, I only bought one at the time. But obviously, you've come full circle since then, and have started several different businesses in the crypto and blockchain space. Some acquired, some venture funded. And really, it was about a year ago that I launched a DeFi masterclass with a good buddy of mine who was previously at Pear VC, was running their Bitcoin or their crypto and blockchain investments. And so, DeFi masterclass effectively is a live cohort-based learning approach towards helping what has turned out to be a lot of tech executives who are in Web 2 who are looking to transition into Web 3 and decentralized finance. We've gotten it's kind of grew gained some traction on its own, and so it's growing, and we're looking to kind of help spread the education around. It's first kind of foray into education, but it's certainly an interesting business. But yeah, it's a little background on myself.
Very cool. And then you mentioned NYU. My daughter graduated from NYU Polytech, probably around the same time as you. So
okay, very cool. Well, I'm older than than you probably think. I'm almost 40. I don't know if you're engaged and right about 40 years old, but
no, so you're 7 years ahead of her. So
okay.
maybe passing by each other.
Yeah.
And I want to welcome Paul and Peter that have just joined us. Paul, we'll start with you. Why don't you tell us about your journey in the fintech industry?
Yeah. So I've been a serial entrepreneur now for over 5 years. Before that, I worked in corporate for 6 years. And then before that, way back when, I was in the Marine Corps for 10 years. So my time as a serial entrepreneur has led me into the venture capital space, or the finance side of entrepreneurship. And so all things lead towards the future in terms of, fintech kind of touches all industries in terms of, how we consume. So the world is changing, and glad to be a part of that.
It certainly is changing with everything that's going on. So next up is Peter. And Peter, I hope I get your name right. Borovykh?
Yeah, that's nice.
That's good. Wow. All right. So tell us about yourself and your history in the fintech industry.
Yeah, so it's mostly blockchain and crypto. So I joined the space at around 2015, 2016. I did graduate, I think, with the same year as your daughter, actually, from NYU as well, Stern.
Huh.
Yeah, we have a close circle here. Over the last 5, 6, 7 years, worked on a number of projects. I'd like to say 50 to 100 different projects, including national cryptocurrencies, supply chain, taxation. Lately, while in the beginning, 2016, 2017, for the most part, there was government projects in emerging countries. Nowadays, it's a lot of startups, some involved in a whole lot of various projects, from ideation to designing the architecture, to designing the tokenomics, to actually building stuff out, to pretty much bringing this Web2 revolution to the world. So
very cool. And Peter and Paul, you guys are both in New York, so maybe you want to link up after this and get together and talk fintech and crypto. So
absolutely, yeah.
So what we're going to do now is I'm going to ask each of you a question. It'll probably take about 10 minutes, and then we'll go into a general discussion. So I'm going to start with Paul. So Paul, let's talk about what Web 3.0 is and how it's being used in the fintech industry. The basic data architecture of Web 3.0 allows it to be utilized seamlessly in the banking sector, let's say to improve user experience. Can you maybe talk a bit about what Web 3.0 is and how it's being used in the industry in particular?
So I think, Web 3.0 is kind of, the wider, more kind of demographic term that I would use is that it's the convergence of all technologies, from augmented reality to virtual reality to blockchain. So it's the convergence of every type of emerging technology that you can think to create a more holistic retail or consumer buying experience, consumer shopping experience, in terms of how we purchase, how we procure, but additionally, how we deliver services as well. So all that kind of boils down into that fintech bubble.
Mm-hmm. And just out of curiosity, I mean, I think, and maybe all of you can answer this, where do you think we are in terms of Web 3.0? I mean, is it real? Is it out there now, or is it still being built?
It's absolutely still being built. I mean, we can see this because of the recent actions, no matter which side you are on, the fact that centralized exchanges all of a sudden decided to ban everybody just because they can, and they claim that they're in Web3, just says that there's no Web3 yet built, right? Because if there was Web3 built, then nobody would be affected. At this point of time, about 200 to 300 million people in the world have a wallet, a crypto wallet. So that's 2 to 3 to 4% of the entire population. And we still have 2 to 2.5 billion of unbanked people who could absolutely take advantage of it. So Web3 is novel. It's not even close to being built yet.
Okay. Yeah, good. I just wanted to clarify that. So Kedric, you're up next. So do you think decentralized finance will help banks and tech companies improve conversion rates and user experience?
I think it's going to be massively disruptive to traditional banks. I think that they're going to try to figure out how to play in this space. But I think a lot of these centralized entities are coming at this from the perspective of, they're going to try to Web3ify or have their skew into like, what's our DeFi play? And there's probably going to be a hybrid kind of centralized, decentralized approach that will work and that they're going to probably adopt. I think that there's going to be a huge wealth transfer, and I think a lot of them are going to get absolutely crushed. And the ones that adopt it sooner are going to have a shot at actually participating in the future. What I'm most excited about is less the, how this is going to help their user experience. I think they've demonstrated pretty clearly that they don't really care about user experience very much. So like what I think I'm really excited about is the fact that with a decentralization of power is the decentralization of value creation as well. And so for the first time, people, wherever you are, if you have the right education and some basic technology, you have the ability to actually earn money in ways that only very, very big banks have been able to historically make money. And so, we have a wealth gap in the world that is an existential threat to society. And so for the first time, we actually have the basic building blocks necessary to allow for a very wide swath of the world population participate in value creation and ultimately get out of this rat race of trading time for money. So I think that's what I'm most excited for, is like, less of like, hey, is this going to help existing financial institutions? I'm not, if they want to participate, that's great. And they're welcome to try. But I think they need to fundamentally rethink how they deliver products. And ultimately, self-sovereignty is critical here. And in fact, as we're kind of entering this phase where technology becomes more part of everybody's lives, self-sovereignty is both a kind of money and privacy is critical for us to be able to kind of position in a society that doesn't look really dystopian. So I think we're on the good guys here in terms of what we're trying to advance in this technology.
Yeah, I would agree with you. And I spent my early years in tech in the banking industry, and I'm not going to say that they didn't care about the user experience, but it wasn't at the top of the list. Let's just say.
Well, yeah. I mean, look, what I'll say is this: I think that regulation is really tricky, and I think that innovator's dilemma is a real dilemma. And so I think the combination of those has led to, the fact that we haven't really reinvented what money can do. We've seen all this advancement in every other aspect of our lives in terms of technology, but I still need to rush to the bank to send a wire transfer by 2 o'clock. I mean, what are we talking about? Like, how is it possible that we're even discussing this? And so, the internet of money is getting invented right now. And so what we're seeing is dollars are able to go out and do more work in this world and do all kinds of crazy things we never thought possible. And ultimately, that's why I believe risk-adjusted returns are going to be fundamentally higher in this world than what we've seen kind of in traditional finance.
Yeah, I would agree with you. So Peter, you're up next, and I'm just going to ask you if you can give your thoughts on the evolution and future of DeFi shaping, and a little bit of information on what that really is.
Yeah, so the DeFi was coined, I think, in the beginning of 2020, right before COVID, and then it took a massive surge in a bunch of different applications. I think a pretty pivotal moment was when Vitalik Buterin said that centralized exchanges should burn in hell, and that's where decentralized exchanges such as Uniswap and then SushiSwap, now it's PancakeSwap, SpookySwap, and all types of DeFi 1.0 applications such as Aave, Compound, that generate yield through borrow lending started occurring, really offering at first high yields, but now lower yields due to the fact that there's a lot more adoption to crypto holders. So if I do have USDT, I can actually generate some type of yield right now if I go to a DeFi 1.0 protocol. And then the evolution of DeFi 1.0 took place, and slowly but surely now there's DeFi 2.0 protocols with a bunch of different properties. It's probably going to be a little bit too much for me to discuss it right now, but it just creates this new novel front of innovation, and it's just starting. And I think it just got really picked up around November 2021, so it's fresh, 2-3 months still to date. It has innovation as far as staking, it has innovation as far as borrowing as well. So I think overall, it's fair to say that innovation goes where money is. And at this point of time, money in crypto, for the most part, outside of NFTs, is really in the DeFi space. So NFTs have tremendous amount of liquidity there, but DeFi is, either number one or number two for sure. I don't really see any other, applications like you can create another, great exchange, or another great, blockchain, good or bad, like Avalanche, good or bad, Neo Protocol, good or bad. But without liquidity, it doesn't matter. It really doesn't. So
yeah, and it's interesting when blockchain came out, Bitcoin or something like Bitcoin was a logical thing, but whoever thought of NFTs, right? So I assume there will be other evolutions of blockchain, right? Yeah. So we'll get into general discussion now, and any and all of you can answer these questions and give us your opinions on them. So what are some of the risks involved with open payments and smart contracts? They are out there. Anybody want to start?
Every single smart contract needs to be audited. It's a great misconception that if a project was launched many years ago, it does not need to be written, because a bunch of vulnerabilities do appear every month. And your smart contracts need to be upgraded respectively. Of course, it's not a pity, but it's just the nature of the things that very few players in the crypto space, do know anything about smart contracts, let alone hire somebody or do the audit themselves, or hire somebody to do the audit. So of course, smart contracts do have risks of all types of cyber abuse and risk of losing all of your money. And you just need to be smart about this. You just need to be super careful with what protocols you're staking your money with. However, going back to what Kedric was mentioning, like, do I trust DeFi protocols more than I trust my bank? Yeah. Unfortunately, the era where I knew that my money would be super safe, and that era only lasted for the last 20, 30 years, maybe since 1990s. In emerging countries, like, forget about this. But even in the US, with inflation of 7%, like, is my money really safe? These banks, like, they could, do whatever they want, over leverage my money, freeze my accounts, introduce significant inflations just because something is broken in the system. I mean, do I trust that more, or do I trust DeFi? So it's not about, is DeFi perfect? It's about, is it better than anything else on the market? And it's getting better and better.
Yeah. And do the other two gentlemen, do you have any comments on that?
I think in terms of, where the future is headed, you can't really talk about supply chain, or you can't talk about the future without mentioning the supply chain, right? You can't talk about the supply chain without mentioning blockchain. So all of those categories are kind of, interchangeable, right? And interdependent of each other. And when you talk about supply chain, when you talk about the future, you have to have smart contracts. And when you look at smart contracts, you look at anything to do with the blockchain, anything to do with the future of fintech, security and speed must be a consideration. In terms of, blockchain or fintech applications being scalable across blockchain and so forth, and getting products to consumers and providing services, we look at, what are the typical issues or the trilemmas, is it's so said, with blockchain. It all boils down to speed, security, and cost, right? And so you have to look at how can we reduce, how can we increase the speed, but also reduce the cost at the same time, while keeping security, is a big factor, or big contributing factor towards the efficiency of the blockchain overall. But I think when you look at smart contracts, that's kind of at the heart of the blockchain and the fintech industry. And so, in terms of, moving fintech forward into, places that we haven't gone before, and providing innovation to, industries ubiquitously, we really need to kind of make that trilemma, a piece of how we evaluate the efficacy of blockchain and smart contracts.
Mm-hmm. Kedric, any thoughts, or shall we move on?
No, I think the guys covered it pretty well.
All right, good. So here's a general one, and this is, we're trying not to get political here, because I think I know which way you guys go on the political scale on this one. Should regulations be introduced with the given frameworks, or is there a need for a ground-up approach? And an example of that is, cross-border payments and things like that.
So I think when it comes to regulation, obviously there's going to have to be regulation. I'm hopeful that regulators take the approach and realize kind of where we're at in history here, where we're at in terms of the impactfulness of this technology. I can't help but look at certain senators who are always claiming that they're fighting for the small guys and trying to help the individuals out and making it an even playing field. But at the same time, they're knocking crypto and knocking what ultimately this technology can do for the individual and empowering that individual financially. So I'm hopeful that this executive order that just came out today, clearly the government's taking this very seriously. That's great. That has to happen. There has to be some regulations. I'm just hopeful that they properly educate themselves and understand the nuances of what they're dealing with here, so that they can produce regulation that is not detrimental to the kind of growth of this industry. Because ultimately, if we in the United States, if we don't take this seriously and we don't get this right, we will be left behind. There's no doubt. I mean, this is a technology which is global and is moving exquisitely fast. We're not in a linear growth curve here. We're in exponential growth in terms of the the composability that these different protocols are offering and how fast this is going. So we got to get it right. We got to get it right now. I think they're taking the right actions. I'm optimistic that they'll do so. Now, I'm optimistic that historically the United States has come down on the right side of innovation. Maybe got it wrong initially for the first kind of certain things, but eventually they get it right. I just don't know that we can afford to not get it right the first time here. So that's sort of my take on where I'm hoping that this will shape up.
Any thoughts, gentlemen? The other Paul and Peter, because it's a very interesting conversation, and the thing that happened yesterday and today, where certain senators are asking to potentially suspend people's wallets. That's tricky stuff.
Well, I think blockchain is. I think that it's really hard to regulate because inherently, genetically, it is prone to decentralization, right? So, how do you regulate something that's all over the place? How do you give you an example? How do you regulate water, right? And so, looking at blockchain, how do you regulate that, right? It's going to be everywhere. It's intangible, and it's going to be consumerized, and it already is consumerized. So I don't even know how the banks and the governments can get in and regulate this. I mean, you have companies like Space Chain. You've got companies such as Starlink that are sending satellites to space, and a lot of it's not regulated. It's very accessible to the community at very different levels of entry and points of entry.
Peter, any thoughts?
It's a very sensitive topic. I mean, it's the same question that we've been receiving since ever in the space. What's the difference? Where's the limit between censorship, for example, and authoritarianship and regulation? Like, where's this line, and who decides what line and how to draw this line? And at this point of time, it's decided by representative democracy. And if we start asking ourselves, how many laws do we know that got passed last month? We have no idea. We don't care. And that's really not what Web3 is supposed to do. And we do have this unique chance to finally kind of get our power back as people. Because frankly speaking, by everything I've seen in the last, I'd say, 15 years since 2008 up until the COVID and now this whole Ukraine-Russia situation and a bunch of other situations with Syria, I'm really questioning the professionalism and qualification of those who are in power. And I'm really questioning how they got there. And I think they got there by tremendous amounts of money paid for those campaigns. And, if money decides everything, then let's just be honest that the laws are then also lobbied by that same, those same kind of levels of funds. And therefore, they are lobbied by the groups in interest. And who are the groups in interest? If you look at and I used to work in the bank, but the banking industry is one of the largest industries in the world. And they're very much anti-innovation because they will lose their share of the pie. So they have nothing to gain and everything to lose. And of course, the question is, are they behind, or are they one, or like, is the banking industry one of the massive players behind this whole kind of anti-regulation and doubts behind crypto and blockchain space here in the US?
Yeah, I would agree. So,
right?
Not to get too political again.
Yeah.
But, to give you guys an idea, my first job, we use punch cards. So that tells you how long I've been around. And
just to add, just really quickly, Mark, to add to what Peter is saying, I know that CBDCs, central bank digital currencies, are on the docket. I am categorically against CBDCs. I think that is a existential threat to us in terms of our individual sovereignty. And I understand why the government wants to do that. I understand the finite controls and super attractive from a power perspective, but I think that that is a violation. It is such a slippery slope, and it gives absolute finite control to the government to be able to do whatever they want. And so I think that that's just I think it's a really, really, really risky thing. And so, so just kind of for the record, I do not support CBDCs.
Do not support it either. Hope it fails because it does not have the socioeconomic factor of Bitcoin. Very similar to what Hyperledger did, very similar to what R3 did, where it's a distributed ledger, but with no socioeconomic factor of incentives to attract different types of players and creating a framework for them to agree with each other without knowing who they are, based on purely by game theory. So I hope they fail those, because CBDC is, like, I totally agree with Kedric, is just another extension of AI itself as a technology is potentially useful. But then if it's used like it's used in China, in some place of China for face recognition, I mean, that's just a violation now. So blockchain itself is super useful, could be used on two different sides of the spectrum. One is like positive one and negative one. Negative one is like total control, like the fact that you, like, everyone will know that you just essentially, paid for Dunkin' Donuts, like a cup of coffee, versus say something like Bitcoin or something like that, more distributed technology where it actually gives you freedom, and it's for us to decide.
It's so easy to abuse that as a technology. It's so easy. I mean, and it's effectively it will devolve into a violation of First Amendment rights. And so I think we need to, as a society, we need to step forward and say that's going too far. Love every other aspect of the innovation, but that's something that we need to really, really protect against. I think, unfortunately, it's wildly bullish for crypto. I think it absolutely jacks up the price because you got the essentially federal government money printing machine directly injected into the use case for Bitcoin is still the same. So I think it's wildly bullish for asset prices, but I think as a society, it's very, very dangerous and something I am not supportive of at all.
Yeah, and it's funny, Kedric, on your original comment, you were hopeful that regulation would do the right thing, and they have to do the right thing. Like I said, I've been around for a long time, and generally the government, whenever there's some type of crisis, they use it to get more power. So I'm not as optimistic as you are on that.
I know. What's the saying? There's nothing more permanent than a temporary government program. Is that what the saying?
Something like that. Yeah.
So yeah, I think we need to hopefully get, and it's not just about like being able to track what our Starbucks purchases are, right? That's certainly something I don't want to be shared, but ultimately, the ability to say, oh, we don't agree with your political affiliations, and so therefore we're going to restrict your ability to actually finance your operations. That's and ultimately, our control of our money can absolutely affect that. So it's really scary stuff. So everything else I wanted to do except for that, just carve that out and say, you know what, this is a power that no one in the government should have.
I agree, and unfortunately, that has happened recently. So we do have to really watch that. I mean, these are our basic freedoms. So.
Yeah, absolutely.
All right, we'll go a little bit lighter now, and do you gentlemen think digitizing trade documents is a good idea?
What do you mean by trade documents?
Well, I'm assuming it means anything where basically when two people trade, like let's say a car, should that be digitized, right? I mean, it is today in the DMV, but through the blockchain.
I think it's already getting digitized. Question is, I think kind of since we're talking about fintech here, and for the most part, most likely digital currencies, the question is, should that information be publicly available? And there's pros and cons. The majority of companies out there right now exist because of asymmetry of information. So I know how much money it costs me to produce whatever, anything, bread, right? But then I'm selling it to the market based on the supply and demand, without disclosing exactly how much money went into production, right? Same thing for any type of service, which is even more difficult to track. So. But then it's going to be up to every single. I mean, at this point of time, the transparency of price generation essentially is a choice of every single company, of every single entity, and that could be a selling point itself, attracting consumers and just bringing that loyalty from consumer base, right? On the other hand, certain businesses have to exist with certain asymmetry of information, because that's how you negotiate. Because if everything is transparent, then negotiations become very difficult to do. But that's going to be a choice. Now, can you do both on chain? Yes, you can. You can do, all types of escrow accounts, all type of privacy-oriented tools on blockchain as well. And digitizing certain assets could just mean more trade and more liquidity. And for example, instead of securing, say gas and oil prices for the next 3 months through forward contracts, you can secure it for the next minute. Technically, maybe, right? Like create 5-minute based binary options if there's enough liquidity on both buy and sell side, on the issuance side, and also on the trader side. So overall, that's going to be a choice, but it's happening regardless. Some of the projects that I'm part of are taking a stand that a number of things that we think are, kind of brick and mortar as far as terms, if they're digitized, could become a lot more flexible and therefore a lot more user friendly.
Any thoughts, gentlemen, or do you want to move on?
Look, I mean, in general, I'm supportive of these. I think that as more and more assets and different types of assets move onto the blockchain, whether they be, I mean, this would be in the example you said, it would be an NFT, right? So those types of, as that becomes available and comes on chain, what we're seeing is all kinds of cool, innovative things can be built around that, which allow for more value creation. And so in general, yeah, I'm super supportive of that. I would love to see that happen, because I think that, a lot of the use cases specifically for NFTs have not been invented yet. I think the most important use cases haven't even been conceived of yet. So we're at it's such a foundational technology. It's hard to fully appreciate how impactful it's going to be for all of our lives in the future. So I think that when comes on chain, cool stuff can happen.
And I think you're seeing more and more NFTs almost every day. There's something new coming up that's an NFT, and right. And
yeah.
I've even
the art use case is and it's a great use case, and it's clearly been successful. But I think again, the most important use cases have not been conceived of yet.
Yeah, and I've actually seen instances where people have stolen digitized art, they've copied it and then put NFTs out there on the internet.
So the only thing I would add to that question, Mark, is that just goes back to what I originally said about the supply chain. You're talking about the trades, the imports, exports market, the trade of goods and services, products, textiles, you name it. So again, you can't talk about fintech without talking about the supply chain. It all boils down to that. So yes, I do think, the digitization of trade documents is probably one of the first boxes we need to check.
Yes, I would agree. So, a lot of people think that traditional banking eventually will be overrun by this new digital technology and DeFi and all that stuff. Do you guys agree with that? And if you do, how long do you think it'll be before that really happens?
Yeah, well, I think we're already seeing, like, it's already impacting their businesses, right? So, look, I mean, look at the yields where it's, when you develop a new product, typically you want to see a 10x innovation, and that's very hand wavy typically when you're developing a new UI or UX, right? It feel like it's 10 times better. Well, within DeFi, we can mathematically calculate that it's 10 times better. And so, for a commensurate amount of risk, I can have a savings account in DeFi that's paying me an order of magnitude more than what I'm able to earn in traditional finance. And so, it's why we have seen TVL absolutely explode. In fact, in spite of the fact that DeFi's, narrative, it fell out of the narrative, but TVL is still growing. And so it's very indicative that, consumers spoke and this is happening. And a lot of these banks, they're driven by the margins, right? And their margins are already starting to get impacted by the fact that more capital is flowing into this new parallel financial system. And so when will they kind of come over? I think that these are older businesses that it's going to take some time, but I think that they're going to be highly motivated to try to figure something out in terms of how do they start to try to get exposure to these types of assets for their existing client base to try to prevent them from kind of making that switch. I think it's I think that it's going to be tricky. It's going to be really tricky to do. And you're going to, a lot of them again are hesitant to embrace, like it's an old business, and there's not a ton of innovation in the way that we think of innovation kind of from a, let's say a Silicon Valley or software development perspective. So yeah, I mean, it's going to be, we'll see how they, how quickly they do it. Probably, if I had to guess, probably, 2 to 5 years, they're going to start really, really taking this very seriously.
Mm-hmm. Yeah. And it's interesting. I mean, I look at it, it's kind of similar to Uber and Airbnb. Like when they first came out, huge adoption by the general population. And then government came in and tried to regulate it, kind of regulate it out of business because of some of their other interests. And the people basically said, don't take away my Airbnb and my Uber, or I'll vote you out.
Yeah.
And I think that's where we are right now with DeFi. Would you guys agree?
Yeah, I mean, I'm not okay with earning 0.5% on my savings accounts anymore.
Right.
And when somebody enters this world, they're no longer okay with that, right? So we're redefining what we expect our money to do for us. Mm-hmm. That's happening. That's already. I mean, anybody that's coming to the space, like, are you pulling your money out to go and put it back into your savings account and earn 0.5%? Like, clearly, you're not going to do that. If you have any knowledge about the space, you understand that for a commensurate amount of risk, you can earn substantially higher returns. So. I think they're clearly seeing that, and they know that they've got to do something. I think it's just hard to. These are big ships, and it's hard to move them, hard to re-steer them.
Yeah. So, Paul and Peter, do you think traditional banking is on the way out, or do you think it's going to stick around, and for how long?
I'll go. So it depends. Again, the same question that gets asked for the last many years. It's very clear. From UX perspective, is the bank better than crypto? Crypto is a little bit more difficult initially to learn, but once you grasped that initial learning curve, operating with crypto is way easier. From UX perspective, you can access crypto markets 24/7, as Kedric mentioned. Like everybody knows, like you send a wire transfer, it takes like a day, at least. If it's international wire transfer, it could take 3 to 5 days. Markets are super flat as far as lots of foreign markets that you have to deal with, and of course that does just create inconvenience. And the fees on the wire transfer is actually very similar. This, like, people complain about Ethereum gas fees. Well, wire fees are pretty much comparable to it now. So of course there are some disadvantages, some cons, some DeFi markets are not perfect, but as Kedric mentioned, I fully agree. Little do we know that we can generate more than 0.5% in the last 10 years, guaranteed, right? And the reason why is because some ultra rich probably have access to those and had access to those markets before, but when it comes down to a general person, average Joe, now he or she has access to those high yields too. And the UX is kind of better too, and the safety is kind of better too. So now the question is, what about the TVL total value locked of DeFi versus banking? Of course, not even close. BlackRock has $1 trillion under management, and the entire crypto space, the market cap of that is what, $2 trillion. So of course, it's not comparable yet. The banks will, at some point of time, jump on this opportunity. They're slowly doing that, but every single early attempt, like JP Morgan tried to do with Quorum, are failing desperately. So is RT, this whole consortia of banks. So those awkward attempts by the traditional Web2 paradigm businesses to join the Web3 will occur, but I really hope that Web3 wins, not because I'm in it, but more because it's just a more right thing to do. Have more power, have more diffusion of that power, knowing that people in charge of more traditional businesses are just not qualified anymore. That's good. If they were qualified, fine, lead me, right? But if they don't know, like if it takes them so long to learn the shift in the paradigm, maybe they're just not qualified.
Correct. Yes. And I do know that a lot of the young talent coming out of our universities is not going into the banking sector.
Yeah.
So Paul, any thoughts on that?
So I think if you're going to look at the future, you can't look at the future without looking at the past and the present. Our traditional bank is traditional banking, going to be a thing in the past? My answer to that would be a long-term yes. I say that because if you look at the history of currency, if you look at the history of how humans purchase and consume things, it all starts with back to roles in society. So before there was barter and trade, everybody had a role, and that equaled production in society. And then we moved to barter and trade, right? So where we traded textiles and physical goods, right? And some societies still do that. And then from there, we moved to currency, where the coins and dollar bills. And then we moved to credit cards. And now we're at the digital space. And now we're even trading, we're kind of going back to barter and trade at a higher level. We're going back to areas like trading digital assets and so forth, right? And so if you look at where the future is headed, now we're doing deep space exploration, right? So we're talking about building supply chains to places like Mars. This is very real. It's happening now. Mars and the moon and other places in space. Well, if we're going to build communities there, we have to have a foundational infrastructure, and that foundational structure will, while we're building on the coattails of Earth, while we're building and piggybacking new societies in deep space on the foundation or on the back of Earth, we'll rely on the infrastructure here on Earth, right? And so with all that being said, we're not going to be building banks on Mars or on the moon. We're going to be trading digitally. And so we have to, when you look at deep space exploration, you have to look at the lowest level infrastructure possible, because space is a very volatile environment. So we can't be building banks or anything of that sort. We'll have to rely on Earth's infrastructure, which means that we won't be trading coins, currency, anything that you can hold in your hand, because it doesn't fit the environment. So with that being said, in the big focus now with a lot of companies, a lot of industries focusing on deep space exploration, I do see banks getting pushed aside. I do see governments focusing more on how do we create kind of a multi-dimensional banking system for the future, new payment gateways and so forth that operate outside of or within Earth's orbit that are both conducive to spending money and procuring goods and services on Earth, but also as well in space. It has to work in both environments for where our global business community and humans as a whole are headed. So that would be my long-winded answer of seeing that banks are out.
Interesting. You don't think about other planets or other, celestial beings, but you're right. Eventually it will get to that. And I even think, even there's some third world countries that would benefit from this that really don't have that, financial infrastructure that it could get them up and running right away. Right.
Definitely.
Yeah. So we've got a few minutes left, and we're talking about a very technical thing, blockchain and DeFi and all that's very technical. We've yet to talk about the technology, really. Just we've been around it. But what are the issues surrounding the current framework, such as API connectivity and things like that? What do you guys think about that?
All right, Peter, you probably most qualified with your background. Do you want to take it?
Yeah, I mean, can we define API connectivity specifically? So I did hear that question as well on the agenda, and I was like, what does it mean?
Well, to me, I mean, to access the blockchain, you have to have some type of connectivity to it, right? So, and it is a fairly new technology. I mean, it's been around for what, 10, 15 years now, but APIs have been around for 40 years.
I see.
Yeah.
Okay, got it. Yeah. Okay, so let's just kind of like on a more high level plane discuss kind of the difference. So API is like a connectivity plug, right? But that's the whole point of Web3 is Web3 gives access, decentralized access with decentralized, you could say, password storage on each individual entity. So therefore, there are some attempts to create, to connect the traditional world, the real world, to Web3 world. And the problem with those connections is like those connections are essentially trying to, instead of fixing the learning curve and empowering every single individual to learn how Web3 works, they're just trying to take a shortcut and say, hey, we create a hybrid model here. We are connecting the real world with the Web3, use us. Problem with those connections are typically not safe unless they're super duper centralized. And that's one of those connections is, for example, Coinbase. But Coinbase is not the only one. There are a bunch of KYC, connectors out there, like APIs, right? There are a bunch of merchants out there, whether good or bad. And the argument here goes like, well, that's what the market needs right now. Let's create a product. My personal antagonism against it is based on the fact that I do not want to create a shitty product that will exist for the next 5 years and then will disappear because people will just get up to speed, right? By people, I mean, consumers or users or B2Bs, because B2B is always, peer-to-peer, right? It's always like C2C, right? It's always somebody in the business is deciding what to do. So why create a product that will get certain traction, and how do you then reposition that product down the road? So me personally, and kind of our team, is always Web3 maximalists, not because that's a cool word to say, but that's just because it's a logical thing. If you want to build something sustainable for the next 10, 20 years to live, you need to have the right kind of approach and right paradigm. Now, about the APIs, yes, it will take some time for the majority of businesses out there to get up to speed. And that's why, those APIs, those hooks, those connectivity tools do get a little bit of traction nowadays. But the reason why they do get that is because of over-regulation. We go back to that question. If we focus instead on educating the community and the population about the novel technologies, we won't have to deal with APIs because the traditional smart contracts out there do solve the issue. When there's enough users, then that's where, as Paul mentioned, we could, potentially switch towards something, cheaper as far as gas fees and more scalable as far as transactions, TPS, transaction per second. We don't need this now. Really don't. There's not enough people. The fact that Ethereum is whatever, $20, $30 per transaction, yeah, it could be insane. It could be a little bit unusable, but it's not the end of the world. Like we don't have a need to do 1,500, 1,000 transactions per. It's just not required. Yeah. So it's a little bit of more DeFi as opposed to a little bit more Web3 as opposed to like I'm really against those integrations.
And there are companies trying to bring those prices down, especially in the NFT market. So it is happening. And I've written, I've called some APIs for some of these, for some NFT providers, and, they're dealing with them directly is a little tough, but there's other companies that have come in and built that layer between the developer and them. And it is getting easier to do.
Let's look at the NFT craze from a logical perspective, right? So of course I'm nobody to say this market is whatever, good or bad, but what value does it really provide? What utility does it really provide to me? And you can say, well, it does provide the art, right? Art is a use case. Yeah, but there's no way how that specific, PNG could be costing $500 million unless it's really backed up by massive community with the idea they can resell later on. Plus, if you really start studying it, there's probably lots of illicit activities, which, fine, let's just let that occur. And if that's the utility, great. But what's the real utility for NFTs from the perspective of what they are now? So ERC 721 by itself, the protocol or the framework, whatever, the EIP behind the NFT is great to have. But what's the actual utility of the NFT being used now? And therefore, of course, you have those APIs for those centralized exchanges where you can use your credit card to purchase NFT. Such a great innovation. So you freaking use your real dollars to buy something useless. That's called innovation in my book. I'm being sarcastic. Like it's
I
helps
understand.
nobody, right? So on the other hand, if you do connect the NFTs from the real world with something like with some real cash flows or with some real utility, of course you. But then you don't need the APIs.
Mm-hmm. Right. Yeah. So yeah, and whether those things are useless or not is in the eye of the beholder. I don't understand why
The
some
market
of
will
these
decide. Yeah, the
right.
market
I
will
don't
decide.
understand how some of these NFTs are going for thousands and thousands of dollars when it's not something you can touch, right? In general.
I mean, look, I'll probably come to the defense of NFTs a little bit more here. One of the things that we're seeing is real value accrues at the community level. Like the community is really valuable, and NFTs have proven to be a really effective tool to help motivate communities and incentivize kind of behaviors and offer benefits beyond just kind of potentially financial reward, right? These are becoming symbols of pride and achievement. I think some of the most important NFTs that you're probably going to own are NFTs that you cannot buy and you cannot transfer. So the way that we position this and think about this in terms of like for our course DeFi masterclasses, you know, if you look at what's most exciting with kind of this internet of money that's being built is for the first time, we're able to give developers tools in Web3 to build out incentive structures that motivate an entire community of individuals to do stuff. And in Web2, the people who actually gave a shit about what you did was essentially stopped at your employees, maybe some of your customers, very, very little. Now developers have the ability to, with fungible and non-fungible tokens, architect incentive structures and behavioral structures that will advance that company's or project's missions much more effectively. And so the way we try to describe it and think about it is like, you know, if you think about like that Maslow's hierarchy of needs, the bottom two layers of like food, safety, shelter, right? Those are needs that are very effectively serviced with cryptocurrency, like fungible, fungible tokens, cryptocurrencies, in you know whatever it is, stable coins, whatever, right? I can get paid and I can buy stuff that I need. But you know, as you move up the curve, where it's a lot more intangibles, you know, need for community, need for self-actualization, those are human needs that are really effectively serviced with NFTs. And so I think it's really the combination of both of those assets that will allow for a whole new structure around how communities can be organized. And I think fundamentally Web3 companies are going to be at a strategic advantage over Web2 companies because of the fact that they have this tool set and are able to embrace this tool set to get a larger group of people to care about what they're doing and try to advance that mission. I mean, anybody that's been in a startup company knows the hardest thing to do is to get people to care about what you're doing. And so these are tools, both fungible and non-fungible tokens, that I think will allow for that to happen. And so it's one of the reasons why, you know, I say, like, I don't think we've invented or even thought of what NFTs will be utilized for, which are really important in the future.
Yeah. Let me jump in here. So I do agree with self-expression, and that's the problem that NFT is solving. All I'm saying is there's so much more to ERC 721 than just the current application, and those extensions to more problems to be solved do not necessarily need APIs. Yeah. So I'm not anti, like, the market, whatever the market thinks. I'm pro. I'm kind of very much pro market, especially the less regulated the better. But the NFTs, the ERC 720 protocols or EIP 1155 has so much more to offer, and whatever those problems are, that does not need APIs necessarily.
Yeah, and I would agree. And full disclosure, I'm working on a project that's usually utilizing NFTs, so I also am pro NFT. I just question some of the NFTs that people and the prices that people are paying for them. I think eventually they're going to be like, what was I thinking?
Oh yeah, absolutely. But again, I think it's just kind of it's a really interesting technology. I mean, like, I always come back to the example of like when the radio was invented, right? When television invented. When television invented, the first commercials were just somebody standing in front of a television camera reading a script, because that's how they did it in radio. They hadn't fully embraced this new medium and haven't fully embraced kind of this fundamental shift in terms of how this technology changes things. And so I think that's what we're seeing. We're just seeing like a knee-jerk reaction. Hey, this is really cool. Let's bid it up and pay exorbitant prices with, that are clearly not sustainable long term. So no, I think we're definitely on the same page.
Yeah. So we only got a few minutes left. So why don't we just go around and we'll start with Paul and just your general thoughts on DeFi and Web 3.0 and where it's going.
So my general thoughts would just be that, there's a lot of innovation that needs to happen in this space. It has to happen. We're already in the pool, so we got to learn how to swim in this space. And it's going to take open minds. We can't get there if we're constantly trying to regulate everything and handcuff everything. It's going to take open minds and a certain appetite for risk. And it's very important because, we have dwindling resources. We have a growing global population, and it's not just fintech, right? It's not just fintech, but it's the way that we consume to survive as a human species, right? And so in order to do that, we have to change the way that we consume. And that's what this blockchain fintech is going to do for us. That's what I think it's going to do for us personally. And the only way that we can get there is, collectively. And so I do like things like, NFTs. I do like things like, crowdfunding space projects and talking about it on panels like this. I think that's important. So in summation, I think that's where we're at. And, I would recommend that, people start researching this stuff and kind of, if they're not familiar, educate themselves on this, and just think open-mindedly about how can we embrace new ideas? How can we learn from, how can we share lessons learned without ego involved? Because if it was already a failure, well, you can't fail again. So we might as well share the experience and help everybody learn so that, we all collectively, benefit from the experience, right? So those are my thoughts.
Okay, thank you, Paul. Peter, what are your closing thoughts?
I agree with Paul, and I think so. I think Kedric, you deal with some type of education for the blockchain, so that's kind of what needs to be done for the space. The only way for the wisdom of the crowds to win is to have a huge crowd. So the more the better. We have 300 million people, 300 million wallets, whatever. But the more the better. We have this unique opportunity where technology could really help us become more independent. There are various reports, including government reports, that do forecast that there could be diffusion of power down the road the next 40, 50 years. And the governments could essentially, be serving, be servicing the community, through police and military, but then a number of functions will get diffused to us, such as, education, healthcare, etc. And the best way to power this is to start with yourself. Yeah, just get educated. That's a unique opportunity. We have a unique chance. And unfortunately, if you do not win this war, then yes, it's going to get even more authoritarian through CBDCs and that kind of stuff. So we either help ourselves or we don't. Unique opportunity. Yeah, let's do it.
Okay, thank you, Peter. And Kedric, we started with you, so we'll end with you. Let's hear your closing thoughts.
No, I think to Peter's point, I think we have a very big opportunity to, look, historically, bad things happen when power gets centralized. We have a foundational technology which allows us to decentralize power. And I think we're trying to advance that. And I think if we do that successfully, then it allows us to position ourselves effectively in the framework of technology impacting more and more and more and more of our lives. Technology is it doesn't necessarily mean it's a good thing, right? And it matters what we do with it. And I think that was a point you were making earlier. And so we're at DeFi Masterclass, we're trying to lead with education because we think that's the first step. But everything that I'm seeing is indicative that this is an inevitability that DeFi and Web3 takes over. I think it's, if you understand and look at foundationally, what are the pieces of this technology that are enabling this, making this so that it's not just a fad. And ultimately, there's better products, better services that older services cannot compete with in this new space. And so I think like at a fundamental level, this is going to be a lot bigger than anybody appreciates right now. Even me. I mean, this is bigger than like the most bullish case scenario. This is bigger than that. And so I think it's on everybody's responsibility to kind of do their part to learn about this and educate themselves.
Yeah, and I would agree. And having kids around your guys' ages and eventually grandkids, I am hopeful for the future and decentralization, and I think it is long overdue. So on that note, gentlemen, I want to thank you for your time. It's been great. You're all very, very knowledgeable on this subject. You brought a lot of valuable information, and I want to thank you for your time today, and have a great week.
Cheers. Thank you.
Thanks so much, guys.
Thank you.
Bye.